Good afternoon. My name's Toby Johncox and I'm head of Enness Dubai. Welcome and thank you for joining me at today's webinar where we'll be demystifying the mortgage market. So a little bit about me. I've been with Enness now for just under 3 years since we opened the office here in Dubai and I've been based in the region for 4 years. Prior to that, I was working in London within the industry. So, I've been asked to give a short market opinion before we get on with the myth busting. Right now, mortgage lending is still very available and interest rates are at rock bottom. It's not clear to me for how long Bank of England base rate will remain so low, and therefore I feel it's a fantastic time for both local and international clients to review their options and secure favourable lending terms. So there's a lot of misconceptions around UK mortgages for international clients, and many people believe they cannot be helped, when often this is just not the case, and it is possible to organise them a solution. Today, we'll go through the main myths, which I hope will provide you some interesting information, and no doubt there'll be some questions at the end. I'd be happy to hear from you, so please add them to the Q&A. Okay, so into the myth busting. So myth one, which is a good one. You'll need to save up a large deposit in order to secure a large loan. Now, that is correct. A lot of the international lenders will require or will reduce their loan to value thresholds on larger transactions. But that said, there are several lenders who do high loan to value lending for large transactions and international clients. And I can think of one right now who's lending at 80% loan to value. Myth two. It is impossible to secure £1 million mortgage without any assets under management. So whilst a number of international lenders do require the client to place funds on account, whether that be in the form of investments, portfolios or cash, there are a number of international lenders who will offer dry lending, so with no assets under management. And I'm aware of a number of cases that Enness brokers are working on right now in excess of £15 million per transaction with no requirement for assets under management. Myth three. Is a low interest rate always the best deal? So I think this is two-sided. Obviously, most international clients will be buying for investment. Therefore, the cost of the mortgage, setup fees, lawyers' fees, valuation fees, and arrangement fees, along with the ongoing costs of the mortgage, are critical for making that a smart investment. But I think international clients need to be aware that it's not always an easy ride. And therefore, they must also consider the process in which the bank's going to put them through. Now, the Enness advisors are extremely experienced in handling international clients and therefore know immediately after discussing a client's profile which lender is going to be the most sensible to present and also who's going to give the most successful result. Myth four. Can I get a mortgage without finding a property? So the straight answer is no. You will need a property in order to submit a mortgage application, as the property is the security in the application. But I think this can be answered slightly differently, and it's absolutely critical that any international or that local clients looking to buy property, it's critical that they speak to an advisor at the start of the process rather than waiting until they've found a property. And it's for a very simple reason. An Enness advisor can have a short conversation with a client, gather the relevant information, put a small profile together, issue indicative terms, and make sure the client is in absolutely the best shape to submit an application, whether that be helping with documents or, on the other side, introducing you to other industry professionals such as real estate agents who will help you buy the best property at the best price, lawyers that can help with the process of securitisation and conveyancing, make sure that's headache-free, valuers and tax advisors to make sure it's the most efficient process. So I think getting all the right professional advisors at the start of the process is critical for the client to make sure they make the best investment. So that's speed, success, efficiency, and also making the client the most profitable decision. Myth five. UK expats really struggle to get a mortgage in the UK. So it certainly isn't easy for expatriate clients to secure a mortgage, as it would be for their counterparts based in the UK who would probably work with one of the UK high street banks. But that said, there's several international banks, building societies and other lending forms that are specifically set up to lend to expat clients. Myth 6. Foreign nationals can't get mortgages in the UK. So it's a brilliant question and leads on really nicely from the expat question. Like expats, foreign nationals are trickier and it's more difficult to organise lending for them. But big part of Enness's business is organising lending for international and expatriate clients. And as with expatriate clients, there are a number of different lenders who specifically focus on lending to expat and foreign national clients. And the Enness brokers knows very quickly after having that first conversation which of those lenders will be most suitable for your profile. Myth 7. I need a UK bank account to invest in UK property. So it's a really common question that comes up from clients who probably haven't had experience in the UK before or haven't been educated in the UK before and therefore don't have a current footprint in the UK. So yes, ultimately you'll probably need some kind of UK bank account in order for the bank to take their monthly instalments, quarterly instalments, however it might be. This is often opened by the bank that's offering the mortgage, but where it's not, similarly to before, Enness know the correct banks and correct advisors who can help you organise a bank account and make sure that's done prior to drawdown of funds, so that you can go on and service the loan. So whether you have one or don't have one, you will need one, but we can help you set that up. Myth 9. Do Middle Eastern buyers need to come to London to get a mortgage? So I think probably of all of today's myths, this is the one that's most relevant for today's market. There's obviously a lot going on with coronavirus and travel bans. It was just yesterday that Emirates Airlines announced that they were cancelling all of their commercial flights for the foreseeable future, making travel for clients and advisors and everyone very difficult. So very poignant. The answer is no, you don't need to travel to UK in order to get a mortgage. The bank may well require you to take a meeting, but very often this can be done on the phone. And obviously the Enness advisor would be there to hold your hand through that call. I think also poignant to note, whilst we're in a time where travel and movement of information and documents is slightly more difficult, Enness is unique in its structure in that it has a number of international offices, and as a result can lean on the advisors in London can lean on local experience in order to make sure that documents are provided in the correct way and also are able to move around and obviously get to the bank in the correct format. Middle Eastern investors must always provide proof of income. So typically, this is a requirement, so this is a truth. Most lenders will require some type of income in order to assess affordability of a loan. That said, there's a number of different incomes in which a bank could assess. So you have obviously the more standard employed and self-employed income, but banks can also consider rent, investment income, and even sort of more unique, more sort of quirky than that. We know lenders who will consider a client's liquids assets in order to assess their affordability. And also if failing all other options, there are also lenders who will consider prepayment of interest in order to meet and satisfy their affordability assessment. Number 11. Myth 11. Sharia compliant financing is not available in the UK. So obviously based in Dubai and sort of speaking with clients regionally throughout the Gulf, this is a question that often comes up. It's a no. There are many lenders who will lend on Islamic finance terms in the UK, both UK-based banks, Gulf-based banks, and other international banks. In this market today, those products are as competitive, if not more competitive, than conventional lending. And we can see a number of clients that wouldn't traditionally take Islamic lending because of their belief, opting for the product because of the quality of and the competitiveness of that product. Okay, and myth 12, last but not least. Can Middle Eastern business owners get a UK mortgage? So yes, the answer is yes, Middle Eastern business owners can get a mortgage. Typically in the UK, a bank would look for audited account or tax returns or something like that in order to prove the income that client is generating. Now, It's not very common in this region to have audited accounts, and obviously there's no tax, so there is no tax return at the moment in the Middle East. But there are many ways to skin a goat. Enness brokers work with several different lenders who can work from different proofs of income. We could use accountants' letters, invoice history, and other forms of proof of income that the client might be able to put together in order to assess a client's affordability. So the answer is yes, Middle Eastern businesses owners can get a mortgage. Enness know the sort of lenders and the appetite for those lenders that have the appetite for that type of mortgage and know how to structure those transactions. So those are the 12 myths for today. I hope that's been really interesting, and thank you for joining me. There are now a couple of questions from the audience which we'll do our best to answer. So the first one here is from Ronnie, which is, do banks and boutique banks offer guarantor style mortgages in the UK? So I think yes is the straight answer. Most big international banks and private banks can offer what you'd describe as a guarantor mortgage. But in instances where this isn't possible, there is another option, which is to structure the mortgage in a sort of joint borrower sole buyer sort of shape, whereby you have one person named on the title deeds of the purchase of the property, but you'd have two people on the mortgage application, which the end result is very similar to a guarantor mortgage. Next question. Okay, so slightly more topical. COVID-19 uncertainty has left many wanting to release and protect equity in order to weather the storm. What are the best options for those wanting to efficiently increase or preserve their liquidity? So I think there's three options that stand out very quickly. The one that's been well publicised in the British press, which is a 3-month mortgage holiday, which is very simply a payment holiday for 3 months, and this is applied for directly to your lender. The second would be a further advance, which is a further tranche of money drawn from the same lender. It's something that we can organise for you. It's incredibly quick, and most of it can be done electronically. So it's a great way to free up and liquidate some cash very, very quickly. And then if that's not an option, or potentially a second charge might be a better option. Now a second charge is similar to a further advance, but it becomes from a different lender, as not to disrupt the existing first charge and relationship with that bank. Again, these can be organised by the Enness advisors incredibly quickly, and could be for the right client a fantastic way to release some equity and help to weather the storm over the next weeks and months. Okay, question 3, which is actually from a colleague. The Bank of England base rate cut interest rates to a record low of 0.1% last week. What does this mean for the mortgage market? So two answers to this question. One is those people that were already on an existing tracker product. Now that tracker product will have already reflected in their for the next payments, obviously a reduction annually of 0.65% for those clients, so they'll be enjoying a reduction in their monthly instalments. And then the second part to that question answer will be, in the more medium term, I think we'll see lenders reducing their fixed rate products in line with that discounted Bank of England base rate, and passing some of the saving onto the ultimate client. Question 4, and there's 2 questions from here. This guy, Henry. I'm buying a new build flat and the property has been downvalued. What happens to my mortgage? So nice, easy question, so thank you. Very simply, the bank will have approved terms initially, say at 70% loan to value. Should the mortgage or should the value of the property be downvalued, which is something we've seen over the last year or so, and I think we'll continue to see in coming months, and something I touched on at the start of the webinar in an earlier question, part of the mortgage process and using an advisor who knows the industry professionals is to help protect and manage the process and sort of manage that valuation. So if in a situation where you did get a down valuation, it would be very simple. What would happen is the originally agreed loan to value, say 70% like I mentioned earlier, that would be reflected against the down valued amount. So you would receive 70% of the mortgage valuation. or more simply, a bank will always lend against the low of the value of the property as per the mortgage valuation or the purchase price. And the second one from Henry, who's obviously on the edge of his seat. What's the quickest and slowest time for organising a mortgage? So really difficult question to give you a straight answer on, because there are many variables. My straight answer to clients will typically be that it takes 6 to 8 weeks for an advisor to organise a mortgage. But that is of course subject to the type of mortgage, complexity of the mortgage, and also availability of client documents. Enness advisors will always try and get the application submitted and offered as quickly as possible. And I think depending on the type of mortgage application you have, some applications can happen much quicker and turn around some even in as quick a time as a week. Okay, and the final question from the Q&A, so thanks for participating, is from Paige, which asks as follows. How will banks continue to value properties during a period of COVID-19 lockdown? So again, another really topical question and something that will be on everyone's mind who's going through the purchase. Certainly there's going to be a lot of transactions needing to be valued very shortly, especially those sort of new build transactions that have exchanged and have been issued their completion notices. So I think my CEO, Isla Robinson, noted on LinkedIn just a few days ago that this was a hot topic, and there's a few things that banks are doing to address this. Now, one of those is automated or desktop valuations. We're seeing a little bit of a return of the drive-by valuation, where valuers either are familiar with the property, have valued the property in the past, or will visit the property and just look at it from the outside and maybe work from pictures or other experience, sales documents, etc. And then finally, there are a number of independent firms that we work closely with that are still valuing properties, obviously in the right circumstance, and they will still conduct physical valuations. And then even further, some lenders using their SAV and their experience in working with their internal teams in order to assess and determine the value of a property. So I hope those questions were the answers you were looking for, at least gave you the information you were looking for. And I really hope today has been informative. If you have any further questions or you would like to get in touch, all my details can be found at enness.co.uk. I've really enjoyed the webinar today. My name's Toby Johncox of Enness Dubai, and I hope to speak to you all very soon.